Finding the right life insurance coverage for couples has a number of benefits, including the potential to save money on policy fees and the simplicity of managing a single policy. There are several life insurance policy options that couples can choose from, such as joint first-to-die life insurance, joint last-to-die insurance, and combined or multi-life insurance. Our insurance expert, Larissa Marzetti, explains how couples can make sure they get the life insurance policy that works best for them.
Another common thing we see is couples, becoming a more formal couple. Some people call that marriage, I guess is the word I should use for that. And that's like a real trigger for life insurance, or say, having a first child or buying a home together, and it triggers, like, they both realize, hey, we need life insurance. Couples obviously can apply for insurance together or get these different kinds of policies as a couple. Could you maybe explain like what a couple of those are, and what are the advantages of any of them, if there are advantages?
Sure. So I think a common one that people tend to think of is a joint policy, whether it's a joint first to die or a joint last to die policy. That benefit, or that type of policy, offers the benefit of lower premiums because you're really only applying for one coverage amount for the two of you. So it's often can be a bit cheaper than, say, if you both go separately and just each of you get, say, each person gets like a $500,000 policy, for instance. The downside with that policy is, especially in a term, there's not many options that you would do a last to die. Last to die is also more common for, estate purposes, not kind of your shorter term or, mortgage type of thing. So with a first to die, the issue becomes then what happens when, say, once one person passes. Well, is the surviving spouse no longer with insurance? What happens to that insurance? And some companies offer it slightly differently. Some allow you to kind of purchase new insurance all on your own, but it's now at a rate that is using your current age at that time. So now maybe you're much older, so the premium's older, your health may have declined. So if it requires evidence of insurability, then you might not get coverage. But if it doesn't, then okay, then you're now just paying a higher rate. The other downside is, sadly, we know the statistic of marriages lasting. And so if you get divorced, that policy really can't be broken up into two. You're left with kind of, all right, now we're both on this policy, but we want to split entirely. So you're basically left with having to cancel your that insurance policy that you've been paying for how many years, that, has fit you well. Now you have to go and apply for your own. And when you apply for your own, you're once again based on your current health and current age. So that's a toss-up whether that works out. Another option that people do is basically taking two individual policies. Now, if you go with the same company, a lot of companies like to offer a discount by doing it kind of what they call a combined policy. So it might be under one policy number, but it's two separate coverages. And so unlike a joint first to die policy, if there is a divorce or any reason that you need to split up, that policy can easily be broken apart. You take your coverages, you go your separate ways, you're good in that regard. As well, if one of the spouses passes, the other one is still covered by their own. It's a little bit more expensive than a joint policy, obviously, because now you are basically, the insurance company is now providing you with double that insurance amount. So if each of you has $500,000, that's basically $1 million total that they've decided to cover. So yes, it's a bit more pricey, but I think I like that option personally better, just because it guarantees me coverage under more life circumstances.
not to be pessimistic about all of these marriages, but in these cases, is it easy enough to change like your life insurance beneficiary? I know in a lot of cases it might be, you change your children or something like that, or whatever, but like what is the process of changing who your beneficiary is, if it's possible at all?
Changing your beneficiary for the most part, assuming that you've listed it as a revocable beneficiary. Very easy. It's a standard form that every insurance company has. Basically, you just fill out this form, state your new beneficiary, sign it, send it in, easy change. In some cases, people use an irrevocable beneficiary, which I don't find a lot of times, mainly because it's more, those situations tend to be more in the case of like court order type of things. And so with the irrevocables, that you now need permission from that beneficiary in order to change. So it's a similar form, but now both of you have to sign to now say, I want this new person on. So as long as you both can agree to change the beneficiary, very easy, but sometimes, getting that irrevocable beneficiary could be difficult to agree with.